catch it. Cool. So our session is being recorded. So yeah, whoever's not here will catch it on YouTube. We'll get started with AUDCAD. So AUDCAD, I don't know, I don't remember who it was that forced us to do analysis for this pair on Friday, I think it was, but we did some analysis for this pair and we discussed already the price action. So I guess maybe this is just going to be explanation of why we've got these or this specific bias. So on a higher time frame, be it a weekly, be it a monthly or whatever, we've got momentum to the upside. After all of this momentum, we've got a corrective structure. And then obviously we've got new momentum breaking this corrective structure. And what we want to do is we want to trade in the direction of this momentum, hoping that we obviously achieve or reach some 90% objective. And then, yeah, from there onwards, we'll obviously reevaluate. But that's so far in the future because we are on such a high time frame. So obviously, we'd just get in the context of the higher time frame so that we get an idea of which direction momentum might be on a higher time frame. Because at any point in time, we're always trying to trade in the direction of the higher time frame momentum, because the higher time frames will always give us value. The lower time frames are there for our detail, for things like execution, risk management, all of those things. That's the gift of the lower time frames. Otherwise, the value is on the higher time frames, guys. So at any point in time, we're trying to trade in direction of the higher time frame information. So otherwise, coming to things here on a daily, just most recent price action. So most recent price action, we've got some sort of a downtrend there or whatever. But nonetheless, what's important to us is that we have this most recent resistance, obviously the last resistance that managed to break some sort of a support. So an important resistance that we are looking at. We saw that resistance obviously being broken nice and impulsively. We've broken the structure. And I guess after we've broken this overall corrective structure, this descending corrective structure, what we can see is that we broke this resistance here, and then we obviously broke back below that resistance. So already we're getting some characteristics of corrective price action. So naturally, so we're looking for this corrective structure that seems to be forming inside of here. We don't know what name it has or whatever. All we're doing is that we just plan contingencies that if the market does this, then this is how I can respond, because now the market will have presented me some probabilities that I can trade. Otherwise, if we come to the price action daily or higher time frame, at least we know we want to be bullish, because obviously the momentum is to the upside and we want to get in on that upside momentum. Otherwise, coming down to a 4-hour, just the most recent price action, we can see that things are very much bearish. Let me just do this so that we can see all the price action nice and clear. Cool. Things are very much bearish here on a 4-hour. We've got a nice solid downtrend. So everything from the top, lower lows, lower highs. But nonetheless, what's important to us is that from this resistance, we've got a low, and then obviously we've got lower highs over here, and then we've got new lower lows. So characteristics of a downtrend, obviously we can see price action being stuck in between our last high, and obviously we just created this low right now. So nonetheless, we're stuck inside some sort of a 4-hour range. This is the high of the range, this is the low of the range. We still have context that 4-hour is still in a solid downtrend. Obviously, we can't be looking for risk entries to trade in the direction of that obviously higher time frame bias, which is bullish. So in this case, what we're going to be doing is we're going to exercise a little bit of patience and wait for the sell to happen. Because like I told you guys last week, that our job is not to catch every single up and every single down. Even if I forecast the fact that, okay, maybe price action was here and we were expecting price action to come down to give us the buy before we buy, the fact that I'm also forecasting this sell doesn't mean I should involve myself in this sell, because this sell just might not have the probabilities that I'm looking to trade with. Remember that the higher the time frame you're trading in the direction of, the more valid that information and the better the move you're going to get. Because if you're trading in the direction of daily bias and you get an entry on a 15-minute on whatever small time frame, you've got an opportunity to manage your risk well, to let that small scalp turn into a day trade, to let that day trade then turn into a swing trade, because you're trading in the direction of high time frame information, rather than you getting involved in a move, obviously, that will just give you this RR and then it's done. So otherwise, our job is not to really involve ourselves in every single up or down that happens in the market. I'm very fine with exercising patience, because when we get a move that's going to make us money. At the end of the day, that's what we want. We want to get those withdrawals up. So for us, it's more quality over quantity. Nonetheless, since we can see that we're stuck inside some sort of a range, this being the high of the range, obviously this being the low of the range, we understand that our high time frame directional bias is bullish. If we look at where price action is right now, we're in the center of what we assume is some sort of a range. So we can't really be making decisions in the center of the range. The only places that we can make decisions is either at the high of the range, obviously for downside momentum, or we need to wait for price action to come to the low of the range. So those are our contingencies to trade in the direction of this momentum or of the higher time frame momentum, I'm going to exercise patience and wait for price action to move from the center of the range, because there is no probabilities for me in the center of the range. And obviously, once we approach the low of the range, we'll be able to see for any type of chart pattern that allows us to jump into any potential longs. If we don't get an entry at these lows over here, then we've got a super beautiful entry, because obviously that means that price action, if we break down below, we've got a point of interest over here, a nice couple, or at least a nice set of equal lows over here, some nice liquidity if you guys are following all of that extra English. Nice liquidity there. Price is grabbing liquidity, obviously, to prepare for the bullish momentum. We're breaking some equal lows. Momentum is to the upside. Here's our POI, nice momentum shift that we can trade at. Obviously, we've got a lot better entry if we wait for the price action to break these lows, come down. We've got better RR, better probabilities. Everything is nice and sweet and rosy down here. So what I'm going to do is I'm just going to exercise some patience and wait for that higher time frame setup. Hopefully, we'll even get a nice third touch of the support trend line completing this descending structure, giving us some beautiful probabilities for the upside momentum. Where we are right now, we're in the center of the range. So on AUDCAD, guys, for the next week, I'm nice and bullish. What we're going to do, for this week's weekly market forecast is we're just going to skip. I know these are all of our, we always go through all the pairs, but just for the sake of time, let's just look at the pairs that are important to us next week. And if we do have some time at the end of the session, maybe if we're talking about something, we'll just look at pairs that are relevant for whatever discussion we're having. Otherwise, let's continue. Excuse my ads, guys. Excuse my ads. I'll sort them out. Otherwise, AU pretty much hasn't changed from last week. So let me not waste a lot of time on AU. AU looks very similar to AUDCAD in a higher time frame sense, I guess, where we've got momentum, we've got a corrective structure, we've got what we're assuming is a manipulation outside of this corrective structure. And obviously we can see price action has broken back into the corrective structure. And aside from us breaking into the corrective structure, if we just go to the most recent time price action, you guys can see, I think we spoke about it last week as well, is that we also did give a small new higher high. This is the last resistance that managed to break a level of structure. Yes, it's not an impulsive break of structure. Cool, we understand, we can see, but nonetheless, it is still a higher high, and it's a higher high being formed where we expect higher highs to be formed at the end of what we assume is our corrective structure, preparing for the next momentum that breaks the corrective structure. It's in the right place. So let's take what we see. And then obviously we look for other probabilities to support that bias. So nonetheless, since we've broken back into the structure, I would like to be more bullish biased than I am bearish. But obviously we can see that the most recent price action, just like AUDCAD, is still trending very much strongly down. So what we've got to wait for is we've got to wait for price to enter somewhere where there are probabilities, to come to a place that gives us a chance at least to look for some sort of a risk entry. Otherwise, we wait for those reversal structures to form. And obviously, those reversal structures might give us new POIs or whatever the case is, giving us probabilities in other areas to trade this exact same setup. That's what they mean when they say that traders are supposed to be more, what's this? Responsive instead of being predictive. Being predictive means that I've got a plan that I'm going to be bullish. I'm going to be bullish from this POI. But being responsive means that I'm going to adapt and change, that if price does give me a second entry, it's still in the direction of my high time frame bias. It still fulfills my entry criteria in a sense of maybe I got a higher high, whatever. That means I'm going to change and obviously going to adapt and then take the new entry that presents itself. So what I'm going to be doing here on AU, even if you drop down to a 4-hour, yes, I am bullish. The market is still bearish right now. And I'm going to exercise patience and wait for the sellers to exit the market. Maybe here's another talking point for us, just to build each other as we're going along in the journey, because we're all at different stages. Maybe someone might know this, maybe someone might not know this, but always take into account context. We've been trying to sell AU for the longest of time, but where are we right now? We're at the beginning. The first time we ever tried to look to sell AU was because of this ascending structure over here, right? This small ascending structure, and where we were expecting this ascending structure to terminate, we're expecting to terminate at the 90% rule. That was the end of this small structure. And we can see that this small structure turned into something a little bit more complicated, that had some extra pizzazz inside of there, and then that had some extra, it turned into something that was very complicated just to fulfill the exact same objective. So take into account the context. Yes, the market is trending down, but are we at the beginning of this trend? Are we in the middle of this trend? Are we expecting this trend to end? Does it make sense taking a risk here in this environment, just taking into account something as simple as the current context. Where are we in the grand scheme of things? Because we never ever forget our previous biases. Well, how we forget our previous biases, that we don't let our previous biases affect how we analyze and view the current market information. But we always remember what our previous biases were, because our previous biases had reasons. We had reasons why we wanted markets to do specific things. And we'll always find out that if we've got a system that we've been obviously executing consistently for a long period of time, you'll find out that market is set up in such a way that you might get what you predicted, but obviously you can't predict every single up and down. Yes, we wanted price to fulfill a 90% objective. Did we assume that price didn't have enough supply to make that move to the downside, and she was still going to go up, generate more liquidity, do what, before they end up just to come and achieve this exact same objective that we were looking at from last year November, or at least from beginning of last year November? The same objective. So you find out that sometimes, yes, you're right on whatever you're assuming, but you just didn't have the capacity to predict how the market was going to complete that move. So nonetheless, we digressed way too far. Let's just get back to where we're going. So all I did on AU was I adjusted for the current structure. So how we had our previous trend line was something like this. And obviously we saw price action breaking this level of structure, but we broke in a corrective manner. So all I've done is I've just included I've accommodated for the current price action over here, obviously just taking into account this new high. Why did I take this new high into account? Is because this new high did manage to break some sort of a support inside of there. So I just felt like, okay, cool, this is good enough for me. Let me just take that high. We'll see. Nonetheless, resistance is not really important to us because we're not looking to sell. We're looking to be buyers. So what's important for us is our support trend lines, or our horizontal supports, or our support or demand POIs. Nonetheless, just to conclude this overall setup, you guys can see that there is still at least a lot of room, or at least our forecast tells us that there's a lot of room for price action to still continue selling before we get to this value area over here, obviously, where we look to do stupid things, barcode, whatever. I don't mean literally, but what I mean is that this is the area where basically, this is all the stars aligning for us. There's still a lot of time, or at least price action still has a lot of distance to go before we get to where the stars align for us. All we got to do is just you decide whether you want to ride the wave down, or you can exercise patience and wait for your probability setup to come. Obviously, that touch complete, right at the POI, support trend line, all that nice good stuff. And then obviously we're looking for 90% rule objective. You decide. But nonetheless, on AU, I'm 100% bullish from this POI here. Obviously, we'll just see during the week if we do get some nice momentum to see if we can find some breaks and retests, if it's safe enough. But looking at where we are, it never makes sense for me to sell into a support, no matter how no matter how confident I feel like I am. Logic, I guess, will outreason any other feeling. Nevertheless, let's go on to, why is New Zealand dollar yen here? Guys, this pair is not supposed to be red. I think I did it by mistake. There's nothing for us on New Zealand dollar yen. I just know that in my head. There's absolutely nothing. So let's just go on to US30, just so that we keep our whole thing agenda about time. I see Kalani saying, hey guys, I'm late. No stress, man. If you didn't catch the beginning half of the session, I'm going to upload it on YouTube just so that you can catch whatever you missed. But otherwise, all we spoke about was AUDCAD, AU, and now we're on US30. So you're still in time, man. You're late, but you're on time. So US30, let me explain before we get into the analysis. Let me explain what's going on here on US30. So US30 for me just looks like a large corrective structure. On a higher time frame, on a smaller time frame, on every time frame, to me, it just looks like we're chopping in all directions, right? And so if we're chopping in all directions, the safest thing for us to do, what we've been doing all of this time through, for, or at least me, let me speak for myself, what I've been doing this whole time for the rest of my life, all I've been doing, the safest thing to do when you're in chop, you look for chart patterns and structures that increase probabilities for you. That's all you're doing, because obviously our theory would tell us that chart patterns, or let's go back. If you guys don't know why I don't use indicators and all of these things, is because indicators are supposed to do one of two things, right? An indicator is either supposed to be a leading indicator or a lagging indicator. Obviously, leading indicator is supposed to tell me about the environment. the current environment, for example, something like a stochastic, RSI, whatever, all those funny things, these are leading indicators because they give me an indication on what the current environment is like, whether the environment is overbought, whether the environment is oversold, whatever X, Y, Z, right? Otherwise, lagging indicators are supposed to give me indication of what potential future price action could be. Something, for example, like moving averages. Moving averages are lagging indicators because they tell me that, okay, cool, prices in a downtrend, probably future price action will continue to remain in that downtrend as long as we're below the moving average or something of that nature. Now, cut all of that nonsense of indicators out. What is price action? Doesn't price action tell you what the current environment is like? Is it not a leading indicator? Does it not give you indication of what the environment is like? Are you in a corrective structure? Are you in an impulsive move? Where are you? What's the context? That's the environment. Is it not a leading indicator as well? I mean, a lagging indicator as well. Does it not give you predictions of future price action? Do we not have impulse and then we expect the correction and then obviously the next impulsive move? This next impulsive move is us predicting or us using chart patterns to obviously predict the future price action. So price action alone does it all. We don't need all of those extra stuff. So anyway, getting back to the point, what we can do obviously to be safe is just find chart patterns, because obviously chart patterns will give us an indication of where could the next potential momentum be. And then we rinse and repeat obviously with our rules and make sense of things. Nonetheless, can I just decline this call? Sorry, apologies. I'm in a session, man. Thanks, guys. Otherwise, let's get back to US30. So US30 higher time frame. Let's start with the higher time frame information there, just because it might be relevant just for our overall understanding. Make sure that we're all on the same page. Can I just switch off my phone? Because I told these people that I will be in a session and do not disturb me, and they decide to disturb me. Otherwise, we'll continue, guys. What we're doing is way more important. Nonetheless, let's just look at high time frame structure. So high time frame structure on US30, we're just going to take into account the context, right? Context, let's just look at the most recent price action, because most recent price action will give us, I guess, the most relevant data to deal with. If we look at where we are, we're at some sort of a resistance. We spoke about this deceleration, all those nice good stuff. Nonetheless, what else I want to speak about is I want to speak about this support over here. Why is this an important support that we are looking at? Is because if you drop down smaller, or if you drop down time frames, go down to a smaller time frame, what we'll see is whatever corrective price action that has led to some nice sell-offs or whatever the case is, it started here. It started with whoever this buyer was in this area over here. And after this buyer came into the market, we started breaking resistance and we broke back below. We broke resistance. Eventually, we came back below that resistance. Every other resistance that we broke above, we broke back below. So obviously, we saw all of this corrective buying starting from this area over here. So this gives me some kind of at least an idea, an indication of what decision was made here. This was a low of a correction, and this was the high of a correction. Because remember that, yes, our theory is there to help us give names to things, ascending structure, sideways moving market, what. But remember that we won't always have names to put on these things. But what we always will have is we always will have price action. And if we have rules for what the price action looks like, we'll always know exactly what environment we're in. Because give a name for this thing that has 10 corrective structures and whatever. I don't know. Maybe we'll just conclude that it's a range. But what we, okay, never mind. We're digressing way too far. Let's continue. So low of the range, high of the range. Cool. Let me just remove all of this stuff here, just so that we don't have a mess. Let's go back to the 4 hour. Cool. So we've got the low of the range. Obviously, we've got the high of the range up there. Nonetheless, if we look at what's going on inside, we've got corrective structures moving up, and then obviously we've got momentum moving to the downside. So we can see that, yes, higher time frame, what we have on a very much higher time frame is we've got this momentum managing to break our levels of structure. But in this most recent short-term time frame, we've got a lot of sellers involved. So what this means to me, or what this at least gives me in terms of opportunities, is that this allows me to trade in both directions. Obviously, still, we've got to find the probabilities. That's why last week what we said is that we're not going to be bearish. As much as we want to be bearish, we cannot be bearish because of where we are in the context. We were at this support. Obviously, the structure gave us a new higher high, and all we were waiting for was that lower high, higher low, obviously, for continuation of whatever small uptrend we had. Because we took into account context, we add support and all of those nice good stuff. Nonetheless, we'll rinse and repeat and take into account context and add and adjust as the price action is developing. Let me also just delete these arrows there because they're not useful. Cool. So let's just look at the most recent time frame. Most recent structure. So most recent for our structure, obviously we're trending down very nice and strongly. The most important stuff for us to take into account here in this 4-hour downtrend is that this is the last area of supply, obviously, that managed to break a support. This is the last down move. So obviously, as long as we're inside of this down move, this is potentially still a seller's market. Obviously, like we discussed in this case here, we'll always take into account context, obviously, that guide our decision-making process. So nonetheless, if we just look at what's going on here, we've got some sort of a resistance over here. We've got another resistance over here. All I did was I just took into account what new structure I have there to figure out where probabilities might present themselves in the future. Nonetheless, you guys can see we've got some sort of an expanding structure. Where is the expanding structure? The expanding structure is at support. Obviously, it's some corrective structure. All I'm going to do is just trade the highs and the lows of the corrective structure to be safe. We already understand where the highs of the corrective structure are. Yes, I did go down to the 1 hour, down onto a 1 hour to find the setup for you guys because I wanted us to at least have an actual setup to look at for next week. Does that mean I can't buy US30? No, it doesn't mean I can't buy US30. I can buy US30 if I get a setup that does present good probabilities. For example, we've got a descending structure over here, and then obviously maybe I have a new higher high, and then I have a corrective structure that taps into a nice POI here on a smaller time frame. That is criteria that does allow me to jump into some sort of a buy. So if the probabilities change for a buy, then we'll open ourselves up to a buy. But otherwise, the market is moving currently, and what we're doing is we're not trying to jump into onto a moving train. We wait for the market to stop. And if there is no corrective structure that helps us to get into these buys, then we'll let the buy go. And what we'll do is we'll wait. Obviously, we've got a first touch, second touch, and obviously you guys can see we've got this nice momentum shift over there. Well, we've got two, one there and one on the top here. But this top one obviously is one that it's gonna require us to exercise patience. Nonetheless, let's just use this POI here. We've got a nice resistance and then a point of interest above the resistance. So obviously our job becomes easy because all we do is we wait for price action to come up, break this resistance. And obviously once we've broken this resistance, we are looking for corrective structures to terminate inside of this POI. And that gives us our entry, obviously, for hopefully some sort of downside momentum. We'll see if this downside momentum is going to play through who. We never know what goes on, but we always find the trading opportunities because we're not bothered about trying to forecast whether market is going to buy, whether we don't really care. What we care about is, does opportunity present itself? Does opportunity to take a risk present itself? That's it. That's all trading is about. Not trying to predict whether market is going to go up, down, whatever, because we'll always fail. We'll always fail. And when we fail, we'll push the blame somewhere else. And when we succeed, we'll say, yes, it's me. I predicted this. And that's a recipe for disaster long term. But nonetheless, we're not there. Let's look at NASDAQ. So NASDAQ is the last pair. I feel like I just put NASDAQ on here. Yeah, because our NASDAQ was very nice for the buys now. I'm a little bit uncomfortable trying to sell NASDAQ now, but obviously we have to just trade what we see, not what we feel, not what we think, not what we whatever. If an opportunity does come on NASDAQ to continue the buys, I'm still going to try and jump into buys on NASDAQ. So I'm still continuing. US30 is my contingency for if the world is crashing and burning and stocks decide to fall and crash and burn and whatever, US30 is going to be the pair that I will ride and try and hold those sell positions. If we're not crashing and burning, whatever the case is, then the world is fine, or at least they lie to us and the world is fine, and they pump more new money into the economy, and market loves free money. So obviously markets are going to bounce when there's free money in the market. If something like that happens, then obviously we'll see the stocks and everything going up. And if that happens, then obviously NASDAQ is our plan to try and ride the buys. But nonetheless, let's just trade what we see and what's here on the chart, the current market environment. Cool. We want to be buyers, but if we just look at where we are, we're coming to some sort of a resistance. I'll show you on a 4-hour why this is an important resistance to us. But I don't know if it's a 4-hour or 1 hour, but we'll see. We'll discuss it when we get there. But nonetheless, cool. This is our last sell move that managed to break a level of structure. Inside of here, there are sellers that exist. These sellers that moved inside of here managed to break this area here. Why do I know that there's sellers inside of here? Because I know that someone bought from here. And why do I know that there's more sellers inside of here? Because price broke where someone else decided to buy from. So obviously, just using the price action, this is equal to a downtrend. And as long as we're still inside of this move over here, then obviously there's still some potential sellers market and sellers could still take the price. So what I'm going to do is I am going to take the short just because of the context where we are within the market if the short does present itself. Let's go down to a 4-hour and then we'll discuss the price action there. Cool. So NASDAQ, I don't know if you guys remember the analysis last week, how we had the analysis. Yes, we had this resistance trend line over here, first touch, second touch, third touch, and we had something like this. We had something like this, and this was our break of structure. And then obviously we were looking for downside continuation. This is supposed to be a lower high, and then obviously we're expecting price to continue down to reach the 90% rule of the structure here. That was our bias, I think, last week. But what we can see is that obviously, yes, we did break the structure that we had last week, but ever since we created this extreme high and this extreme low, price is still stuck with somewhere inside of there. So we're still correcting, we're still moving sideways. We still pretty much haven't really taken a direction. But if we look at the overall trend, things, I guess, still are maybe bullish. As long as we're inside of this move here, things would still be considered bullish on a 4-hour. Zoom is telling us that we've got 10 minutes left, so let's just be fast. But otherwise, all I just did was I just accommodated for the extreme highs. This is an extreme high. After we broke this high, where's the next extreme high? Is this extreme high up here? So obviously we just joined trend line. Then if we look left, we obviously have got some POIs there. So I wanted to explain why this would be an important POI for me, or why I'm going to look at this POI as an area for maybe some active sellers. Two reasons. The first most important reason is because it's blatantly obvious. Like, it's so obvious that for 4 hours buyers were stuck there, and then for 4 hours there was a huge amount of sellers that came into the market. At least we can even say for 8 hours straight, because these are two different candlesticks. So it's, first of all, it's blatantly obvious. There's a lot of momentum that came in the market over there. Second reason why I'm picking this as a nice important zone for me to try and find a tight entry in is because if we just look at the 4-hour structure here on the left hand side, we did break this structure, right? But the source of the momentum that helped us break this structure, someone can argue maybe it's this POI over there. I won't argue against you. I would just agree with you, because yes, it is. Price hasn't come back there. But I would also argue and say that this is another area where price gained momentum. I see a green candlestick there, and I see another momentum shift over there. And obviously price broke structure over there. So if we can argue, there's two places where we can see a bunch of sellers came into this market here that managed to break a level of structure. After price broke this level of structure, we came here, and obviously we showed that whoever decided to sell from this momentum shift is still in the market here, because they did not allow price to go back above where they sold from and managed to break structure. I love this English. Yo, guys, I pray that everyone at some point in your career just learns how to read price action. Otherwise, let's continue. Obviously, we can see that they pump price action back down. So now I know that there is a seller. This seller was involved somewhere here, and the seller is still involved somewhere here. So cool. That's why I'm using this as an important level of structure. Oh yeah, we also managed to break a whole lot of other levels of structure, but I'm sure that that part of the discussion was obvious. But nonetheless, I'm sure we can all see why I'm using that as a nice POI over there. Let's go back to the most recent price action and conclude on our overall assumptions here. Nonetheless, we're speaking about probabilities. Obviously, this is the high of whatever we got going on there. Price action was correcting all the way down. And obviously, we can see this correction started at this resistance area over here. So this is the high of the corrective structure. Obviously, this is the low of the corrective structure. Or someone else could argue that maybe this is the low of the corrective structure. I wouldn't argue against you. It would be the same thing. Nonetheless, where are we? We're at resistance. So it still doesn't make sense, heaven or hell, to buy into a resistance. It makes a lot more sense for us to sell at resistance. What we also see is we see a nice resistance trend line that aligns, or that has some confluence somewhere with our horizontal POI, our nice momentum shift. So all I'm going to do, or all I can do, or what I'd like to do, is exercise patience and wait for the buyers to take price action up and put it at a price or at a place where we can look for good opportunities to try and sell NASDAQ. The only reason why I'm not buying right now is because of where we are. I can't buy into resistance, no matter how much I forced myself. My rules are just that, that solid. Where I can buy though, is we've got a nice momentum shift over here down low. So if price comes back to the middle of the range, we've got a momentum shift. We'll see what the price action looks like. That's my contingency for a buy. We could just fall straight from here. That would be even nicer because we'd get there a little bit quicker. But nonetheless, we're at resistance. It makes a lot more sense for me to be a seller. So I do have a bullish bias on NASDAQ as well. I think we're 100% done with the analysis. If there aren't no questions there in the chats, I see 10K Kulu. I thought it was Tinyeko. But anyway, 10K Kulu. What's good there, man? What's good? Damn, that's a mouthful, man. It's a real mouthful. I don't know if you guys don't have any other pairs that you guys want to discuss. I don't know. I typed in NASDAQ. I mean, any questions there, you guys can type them in the chats. I think we've got like 5 minutes left. I don't know if you guys would like us to use this 5 minutes or can we call it a session? But let's see if we can look at NZDUSD, because I think the price action there, as much as maybe there's not a hot setup, I guess, when I looked at it, it was very interesting. It was very interesting. I mean, as a talking point. But it's still very similar to AUDUSD in a sense that you need to exercise patience for it to come down to the low of the range to prepare for the buy, all that nice good stuff. So on NZDUSD, you guys can see if you went up to a daily, obviously we'd have this some sort of an inverse head and shoulders. This would be the left shoulder, last resistance. Obviously price action came down, came back up. We got a new higher high, obviously confirming this inverse. Then obviously all we're doing is now we're waiting for some sort of a right shoulder to form before we see the momentum breaking the structure to the upside. So the English makes sense, right? What doesn't make sense is what price action is doing right now. That's the only part of this that is just not agreeing with this bias. So I guess with NU, what I want to do is I just want to include for this new price action, right? So there's a lot going on here, right? We've got all of this corrective nonsense here, a lot going on. What I want to wait for, or what I would hope to see, is I would hope to see a level of structure being broken. So once I see this 4 hour, any 4 hour support being broken, by obviously is whatever selling momentum, then I would feel very safe to include this as part of my descending structure. Obviously, we just adjust for whatever price action we've got there. Then we accommodate for the new price action, all the new price action. And then we've got a much cleaner, much nicer setup, obviously, that we're looking for the long continuation to the upside, where at a level of structure that we've broken below, broken back above, and at a future date in time, we can come back to retest. We don't have a nice momentum shift inside of there, but I'm sure price action will give us something if we do manage to get down there. So I guess it's interesting to see how this pair was developing. We were expecting the buy from last week because things were just looking very nice. But like New Zealand dollar CAD, yeah, the buy came, but not very sustained. That's kind of why also we're not doing anything on this pair, because there's not a lot for us here. Let's see what's going on there. GJ, UJ, GJ, guys, all of these pairs that you guys are requesting, they're not on the watch list because there is nothing important on those pairs for me. Otherwise, they would have been there. So what I did do is I did go through all the pairs on here. I think the only pair that's on our watch list that we didn't speak about that's also red is AUDCHF. And I think maybe the reason why I didn't speak about this pair is because it looks very similar to AU in a sense that it's broken below, out of structure, back into structure. So it's going to be kind of like I'm just repeating the AU structure. So that's why I didn't include it here. But I've been through all of these pairs, including all of your guys' GJs and EUs and all these things. And according to my process, I didn't find anything. All I saw is something very interesting on AU. If you guys ever remember, there was a time we did analysis on AU and we were looking for price to tap this POI. And price didn't come back until, when was this? February. February, we created the POI. In March, we came back to tap this. Like, I even forgot about this analysis. We left it. Because price broke down and whatever and didn't come back up and give us the tap. And we ended up leaving this analysis. But hey, price did whatever she had to do when she had to do it in her own time. Very nice to see how prices develop and stuff. I hope you guys can see that even though I don't trade these pairs and these whatevers, there's nothing that goes past my eye, because everything that happens, if you are aware, like the Bible says, let those whose their eyes are open see, or something of that nature. Same thing with the market. If you're there, if you tell yourself that you're trading, be there in your whole soul, body, mind, and heart, and whatever. in your fullest capacity, because there's always something to learn from, even from pairs that you're not actively trading, like on AU. I don't trade this pair, I'm in EU. But I'm still following it because there's still something to learn from how the price action develops. Obviously, the only way I'm going to learn is if I'm still using my process and my system on EU. It doesn't help for me to come here and use something totally different and expect to learn something that's going to help me trading the system that I trade every single day when I'm doing something completely different on EU. Otherwise, guys, let's not over talk. Yeah, Zoom is going to kill us in about 1 minute. Let there be peace there in the streets. Let our brothers and sisters be safe. Thanks, guys, for being part of the session, for taking out your guys' weekend. Otherwise, I'll see you guys in the Discord server. Enjoy the weekend, guys.